Hey Chart Guys members, so doing a bit of a review here. This is from a couple days ago and it was an APHA short. And again, shorting the Canadian MJ sector has been wonderful recently and it's worth getting familiar with both directions. I know the vast majority of people that I interact with only play the Canadian MJ or MJ sector in general bullish, and that's fine, but when we can utilize both directions, it opens up a world of possibilities of making money in any markets. And the bears have certainly had a lot of opportunity in the last couple of months. Certainly more opportunity than the bulls. So the setup for the trade was the gap down, the second gap down in a row, second gap down open in a row on the earnings reaction and some extreme oversold conditions and an oversold bounce. And on the hourly time frame at that point in time, the RSI was crushed down into just about 20, right around the teens, and we saw a significant bounce, and it ended up being a short squeeze. This is a short squeeze. It's not your massive explosion short squeeze. It's your slow and steady continued buying and short covering pressure that just gives the bears no chance to exit. Just a straight shot from 13 to 15, which is a massive 16% plus bounce. And again, with very minimal consolidation. And I can say it's a short squeeze because the bears had complete control on the day prior. So you know that there's a lot of bears in positions. And again, this is bulls buying the dip, but a lot of short covering as well. So I look at the setup and it got extended to a point where I'm saying, okay, now I'm watching for a bearish entry because I know I'm just looking for a daily lower high next time we bounce. And I know that we haven't changed the hourly trend and we will have to change the hourly trend bullish if we're going to get significant follow through. That being said, I was also aware it was a short squeeze scenario. So the last thing I want to do is get stuck in a position and say, oh, we're overextended. And next thing you know, I'm down 4% in the trade. So it got to the point where we confirmed this bull flag and kept going. And again, the 15-minute time frame, very overextended. And just the fact that at the point when I started looking for a bearish entry, we were up 12% plus from that low with minimal consolidation. So what did I do? I looked back at resistance. And I said, okay, what is the most important resistance level? And the high of the previous day was up at 1472, I believe. Let me double check that. 1476 was the high of the previous day. So at that point, I say, okay, I'm watching that resistance, and I'm watching it for two things. I'm watching it for a rejection or also the possibility that we break it, and then that marks a top. Because oftentimes you will break a key resistance level, or oftentimes it's a psychological resistance level, and that's the last push up that the bulls can muster because there's a lot of shares there on the ask, and that last buying pressure to knock out that resistance uses up the buying pressure, and that generally can lead to a short-term pullback. So I made an entry for my first position with a possibility of a total of 2 positions. I waited for that break and I made a bearish entry, and it was at 1472. I got my orders written down here. Fidelity is a little bit harder to look back multiple days ago to find what your orders were. But first order, 1472, half a position, and I am willing to enter a second half when we get overextended. At that point in time, the 2-minute time frame was also extremely extended, and a reason that I was looking short. Because again, we consolidated, set a 5-minute bull flag, 1405 support, and then we just kept going up. No 2-minute consolidation, very extended. And again, my entry was right around here. So we got to the point where I made my first bearish entry and I said, okay, I'm going to make a second entry in the 1490s. I saw the bulls continue to hold the 1-minute EMA 12. This is the 2-minute chart, but you can see we're not even touching the 2-minute EMA. We are as strong as possible by riding the 1-minute EMA 12 support all the way up. And I said, okay, I don't want a full position too quickly because again, I view it as bullets. I got a gun. I've got 2 positions. I got 2 bullets. I fired 1 bullet. I do not want to fire the second bullet prematurely. And now I'm out of ammo and completely out of control of the trade. As long as I have 1 bullet, I have some maneuverability and control of the trade. So rather than entering at 1490, as I was anticipating potentially doing, I was looking at 15 as a psychological break. Again, either a rejection or break 15, and right after breaking 15, I enter bearish. And at that point, let's talk about position sizing. So I go by a day maker and a day loser for what my goals are. And on the initial half position entered at 1472, a day loser would be 1512. So we're getting close to my maximum. You know, you break 1505 and I make a bearish entry, and if we don't get a pullback from there, I'm going to stop out very shortly thereafter, take my day loser, and then just be wrong on the trade. So entered at my second position at 15, I was filled. I didn't set my order at 15. I watched the price action. We broke it, and then I market sold short, and I was filled at 15. So at that point, my break even is 1486 on both positions. That being said, I have no bullets anymore. And I know that we're likely to just form a 2-minute higher low, and we could very easily see continuation from there. And again, then I would stop out. So what I do, once I enter that second position, I am much more agile with that new half position. So on the 2-minute time frame here, we bounced around at that level. And actually it was on, let's go to the 1 minute here, because I was watching the 1 minute at this point in time, which I don't often do. But in this scenario, I did. So here was this move, again, just riding the 1 minute EMA 12 up, made my initial second bearish entry at 15, and then we got a real quick 10-cent pullback. And I covered at 1492 because, again, what that does is, yeah, it's only an 8-cent gain, no biggie, but I now get one of my bullets back, which is more control of the trade. My break even on my initial half, because I just gained 8 cents on a half position, my entry was at 1472, so now my break even is 1480 on my second position. So now what has to happen for me to have a day loser? Now it has to go up to 1520. It gives me more breathing room and more ability to maneuver around. We then broke to a new high of the day. I saw a lack of any follow through. I shorted it again with my half position. I got my bullet back. I'm using it again. Shorted at 1403. 1503. We pull back real quick. Again, I want to lock it in real quick because I am not comfortable when I'm out of ammo. So that 1503 short, I then covered at 1491 on this little 2-minute pullback. So that was a gain of 12 cents. So now I'm back with my bullet again. I've got a half position, still filled out. It was an average of 1480. I just gained another 12%. Now my average is 1492 on that half position, and I am completely in control of this trade at this point. Multiple times, if I had entered my second position and we didn't get this tiny quick consolidation, I could have very easily stopped out. But again, just being very quick, the trades that I'm in lasted 1 to 2 minutes on my second positions. So now I have one bullet, and we've got an average of 1492. I'm extremely comfortable because now my day loser stop level is 1532. I'm just creating more and more breathing room. So at that point, we pulled back significantly, and I was no longer entering anymore. I said, okay, I've got my half position. I've got a break even of 1492. I'm in control of the trade, and I accept that, knowing that I entered prematurely at 1472. The price went up 2% plus above my initial entry, so it could have been a big win if I had a better initial entry, and I would have kept a more comfortable, bigger position for this whole pullback. But again, it was a little bit of bailing myself out and keeping control of the trade while doing so. So at this point, my half position has a break even of, I forget what I said, maybe 1492. Columbus sailed the ocean blue. And then I zoomed out a bit to the 2 minute, because 2 minute consolidation is underway and we're still in a 2 minute uptrend. And at that point in time, it was a waterfall drop. So a waterfall drop, I know a 2 minute higher low is coming. And at that point, I covered all of my position at 1467. And I'm not sure if it was this pullback, I would have nailed the bottom, and I don't think I did that. It might have been. No, because I would have held longer. I might have just had a really good exit as far as this pullback was concerned, because if I had seen this bear flag and then another leg down, I would have let it ride longer. But it was a waterfall pullback, knowing we're looking for a 2 minute higher low, 5 minute higher low, knowing that the bulls are in complete control. And again, my psychology at this point was not comfortable in the trade entirely, regained comfort, but locking in the winner. So exited at 1467, which gave me a gain of 25 cents, which was maybe a 60% day maker. So in hindsight, holding it longer, obviously I could have had a day maker out of that trade because we ended up pulling back fairly significantly further from that point. One factor in why I took profit too early is I wanted to get off the computer, and that is a very real factor. You know, I had live streamed from 9 a.m. to 10:30, so that's an hour and a half of talking, and then I took this trade after being done the live stream. This is what I then focused on. So now I've been sitting on the computer for 2.5 hours plus straight, and I really want to stand up and take a lap. I trade better when I take frequent breaks throughout the day of even just 5-10 minutes, get off the computer and go outside. So it was pulling on me. I was saying, okay, I don't really want to be in this trade anymore. I want to go outside. I could have set my stop loss above the high of the day. Again, in hindsight, that would have been a good thing to do. Set your stop loss above the high of the day. You're not risking anything. Well, actually, I would be risking anything. That's probably why I didn't do it. It would have been a small red loss. At that point, I wouldn't want to go back to a red trade. I could have done that, though, and I also could have just given it 5 to 10 more minutes to see what this 2-minute bounce looked like. So left some profit on the table, but you will find that when you make an initial entry that's too early, the psychology really shifts. Because at that point, you're just grateful to get back to break even and grateful to get some green on the trade. Whereas if you make a really nicely timed entry, you can let a full position play out more significantly as far as what the trade you are looking for. So make that note of that difference in psychology, because it certainly happens to me where if my initial entry is too soon, it kind of morphs my ability to let the bigger picture trade play out. And the bigger picture trade would have been 15-minute consolidation after that massive bounce. And that would have led to me, well, we were already pulling back on the 15-minute when I did exit that half position. Either way, there's a lot of things that I could look to how to improve as far as keeping that trade a little bit longer. I recognize the rationale and the reasons why I did not. It was a green trade, and I look to do better next time. Hopefully that was insightful. Feel free to ask any questions, and we'll see you next time.